Good morning, everyone, and welcome to the European crossover webinar. And relatively quiet morning to start out the FX a week. We are seeing the euro kind of pushing a little bit higher, not a whole lot of changes. The dollar yen has made it up to that 112. Eased back a bit here, not really making any big move there either. Some of the other pairs, same thing, a little bit quiet after they've made their moves. Even on the crosses, looking at euro yen, same thing, relatively quiet. Keppel just trying to push up just a little bit here, but overall a quiet start here. We're looking at the cash dollar index just gently easing back. We did go in and hold here. Last week we had on Friday, we had the support here at 96.74. That's been able to hold here. We'll probably move that just a little bit lower, but overall, relatively quiet start for the week. Peso continues to remain very, very weak. We're holding here at these lows, although I would expect that to go and push a little bit lower also. And we'll go and take a look at the news. Moment. Okay, let's go and start here with the morning bid. Company chiefs gloomier on the Brexit outlook. With Brexit uncertainty set to continue, a Deloitte survey surveyed this morning underlines some of the deeper economic impact. Some 81% of chief financial officers in question now expect Brexit to lead to a long-term deterioration in Britain's business environment. The highest answer question was first asked at the time of June 2016 referendum on leaving the European Union. The survey was conducted between March 6 and April 7, just after it became certain Britain would not leave on the long-planned date of March 29th, and before PMA secured a delay for up to 6 months. And let's see, a little bit of news in here. Not interested in any political news. Macron is due to announce new policies in reaction to the yellow vest protests. Let's get on to the markets. Well, which is it, gloom and doom or growth and boom? Early signs today were that markets have shrugged off the weekend communique from the IMF, warning of a downside risk to global growth. Instead, they are focusing on the positive signals from the U.S.-China trade talks, especially after the Reuters exclusive citing U.S. officials on watering down demands in China. Improved from data from China last week. Friday's robust earnings from JP Morgan and Walt Disney, and tentative signs of an economic data pickup in Europe. But initial euphoria seems to be wearing thin. World stocks are now up only slightly, though holding their 6-month highs, and Chinese blue chips have given up early gains. Europe's opening higher after approaching 6-month highs. The S&P 500 is within touching distance of record highs from last September, though futures are in the red this morning. Today, Goldman Sachs and Citigroup will report quarterly earnings. All in all, it's an important week for data. From Germany's ZEW survey, Chinese gross domestic product to flash PMIs everywhere. We should get some clues later this week on whether the world economy is indeed turning around. Currencies and bonds are in tune. With the risk-on mood, we have the Aussie dollar, a proxy for China, risk at 7-week highs, while the dollar's retreated, heading back towards last week's 3-week lows. However, the U.S. 10-year yields were just off 4-week highs. German yields have stabilized somewhat, following the biggest daily rise since June on Friday. In the UK, Brextension has proclaimed sterling, which is steady around 131. Emerging market currencies are broadly flat, taking cues from the yuan and uncertain growth picture. European shares are starting the week on a positive note. The stock 600 is expected to climb back towards its mid-August highs. And in corporate news, results have started to trickle in. Vivendi posted higher on the first quarter revenue and said it was making progress on a planned sale of up to 50% of its UMG music arm. Let's take a look at one other thing here. Okay, and just on the one FX story we'll cover, the yen is stuck near 2019 lows as the risk rally hits safe havens. The yen dropped towards its 2019 low on Monday, and the Swiss franc hit its weakest in nearly a month as rallying global markets dented demand for currencies considered safe havens. Currency market volatility has eased significantly in recent weeks, and moves were again muted, though there were signs of optimism over progress in U.S.-China trade negotiations and strong economic. China's data was published. Was pushing investors into riskier currencies. The yen fell as low as $12.09 in Asian trading, near a 2019 low of 12.13.5, before recovering slightly in European session got underway. Dollar yen is testing the 12 level, and we expect the crisis to cross the break above this level this week in response to solid U.S. data and stabilizing risk appetite. Swiss franc also eased against the euro. Swiss currency has strengthened to 2019 highs of 111.64 francs in late March, and a relatively upbeat assessment of the global economy out of the IMF meeting at the end of last week has helped global investment sentiment. One story says it looked bad. This one says it looked like it was getting, it was an upbeat assessment. The positive movement extended by U.S. Treasury Secretary Steve Mnuchin, saying he hoped U.S.-China trade talks were approaching a final lap. That doesn't sound that close to me. If you say a final lap, that sounds like about another couple of weeks. Data out of the world's biggest economies also pointed to recovery. On Friday, Chinese exports rebounded sharply. Although China's imports remained weak, the data on the whole fueled hopes that the economy is bottoming out of the soft patch. The dollar also weakened slightly, allowing the euro to cement gains above 113. The more positive mood helped offset any concerns about upcoming trade talks between the U.S. and Japan, in which Washington is expected to include a currency provision in a bilateral agreement. We are seeing a classical risk-on market, said Minoru Uchida, chief currency strategist. Now, this is interesting here. If you're having these upcoming trade talks between the U.S. and Japan, in which Washington is expected to include a currency provision, then I'm not sure how much traction you would gain well above 112. And we'll get to that because there's some pretty good volume between 112 and 112.50. So we'll see. I'm not sure how much further this dollar yen could go, but we shall see. Certainly the door is open from a technical standpoint. Data on Friday showed investors bolstered their net long dollar positions in the latest week, pushing it to the highest since December 2015. And sterling remained at 131 and as this is for much of the past week, and the volatility has fallen sharply after the European Union and British government delayed Brexit until October. So let's take a look here. I'm looking at some data coming out here for today. Relatively quiet on the data, on the economic data front. So hang on. So let's quickly get into the analysis. So the euro closed above 12.91 on Friday, albeit by only 7 pips, allows the bulls some breathing room. Bulls are not out of the woods yet. A daily close below 12.47 puts the pair back on track for 11.49. The pair will find sellers at around 13.56 with support at 12.60. So let's take a look at where we stand here on the euro. So we did get that close above 12.91. You can see right here. That's important. But like I said, we just barely came up here. We're not putting in a whole lot afterwards. If you think about that, it's not like as if we zoomed past this area, but we did get above this 1291, like I said, albeit by only 7 pips. And we still have this one area that we came into. If you remember on Friday, we had our resistance at 1329. That pretty much kept the market in check because the high at the time was what, 1325, 24 and a half. But here's where I think, like I said, we'll find sellers in this 1356. We're moving up a little bit higher. One of the guys was asking me on Friday about the euro. I think that individual was looking on the short side, and I said, look, as long as it closes above 1291, which we talked about, early in the week, we were saying, hey, you got to close above 1260. That was helpful, but really you don't start to get out of the woods until you get above 1291. Although, as I mentioned, we didn't even close above 113. But we still close above 1291, which opens the door for us to move higher. Although I think we'll see some good selling coming at 1356. Now, the euro, if we are able to, and I'm not so certain that we'll get here today, although you would think we could push much higher. But I think, as I said, when you close above 1291, that allows this market to move higher, and the real selling would come in around 1356. So, we could come up here to about, let's say, 1338, he's back or whatever, but that's where the real selling will come in. I believe right here is 1356. So we're actually going to go on and move this bias up here. I'm not so sure that we'll hit this today, as quiet as markets have been, but that would be the resistance, 56. And remember the importance of that 1260. Well, that's what we're going to go with here. And you can see that coming in right here, 1260. If we were to slide back, and when we go back to the daily, there's that 1260. That's going to be support right there, 1260. If we go in and pull a slide back, 1260. Now let's go move into cable. Cable continues to trade in a tight range with the pivot 2980 providing support. Upside resistance is found at 32.8. For now, this pair is treading water in a tight 125 pip range over the last 7 days. So let's go on and move into cable. And you can see how tight this range is. We're just staying quiet. I don't know, like I said, with that Deloitte survey showing business deteriorating, I guess it's open to a slide back. Here's the pivot we've talked about, the 2980. We know that we've had that in place for quite some time. But, other than a material dollar pullback, I really don't see where this is trying to push higher. I know people have made the case it's getting ready to gust, it's getting ready to bust, but I just simply don't see it at this point now, other than the thing that'll generate that is going to be a dollar pullback. Once again, even with the euro, I mean, we're higher above 113, but my point was at the time is we closed above 1291, but albeit by only 7 pips. And it's not like as if the euro's taken off like gangbusters. So really it's all going to be dependent as if we see this dollar index ease back. Cable's not doing a whole lot with what they've got right now, but looking ahead, we've been using this 3095 as our bias chart resistance. We've had this 30.95, I think, ever since, I think the entire week. I think maybe Monday of a week ago might have been different, but I think since Tuesday it's been 30.95 all along. Let's try and take a little bit closer look. If we were trying to break higher, it's going to come in right there at 31.50. We'll actually call it 31.52. So we'll give a little bit of room to the upside if we get a little bit of a dollar pullback. And we'll keep this pivot 29.80. It's been holding like a rock, so no need to change that there. Let's move this. We'd actually give it a little bit more extra right there, but we'll give it some room here. Because I do think it might be susceptible to a little bit of a pullback. Look how tight this range is. Unbelievable. Trading super quiet. Friday's daily bar negated the prior day's pullback, coupled with the exponential moving average buy mode suggests there's more upside to come. The pair will now target 72.70 with the closing bar resistance at 72.33. Support comes in at 71.21. So let's go and take a look at the Aussie. So what I was referring to is, look, the prior day we had this run up here, and then we turned around and on Thursday trying to do a pretty good job of trying to give it all back, but then we came right back on Friday negating that. So it's opening up the door for a move higher, and that technical open, I guess they're still hoping and waiting for this year's trying to trade talk. Well, it doesn't seem like it's that close to me, so I keep wondering how much longer they can be able to hold on to this. But the door would be open to 72.33 right here. Okay, initially speaking. If you're looking for resistance, well, we're at 66. We're going to go right there at 72.02. Doesn't say a whole lot, but it's going to be initial resistance at 72.02. Still quiet. It is very quiet in here, so now we're looking for a move to 72.70. Go right up here. Okay, right there with some resistance to 72.33. But like I said, I don't think it's going to be one straight shot, especially like I said, this China thing, what's his name is saying, Mnuchin says, I hope we're in the final lap. Well, I hope we're in the final lap. That sounds like you're looking at about 2 weeks away. So what we might do is we might just jump up in here and maybe just above, take out some stops at 72 cents and pair back. So although I believe they're looking for a move to 72.70, you'll see a pause at 72.33. Before you get there, I think about 35 pips away, you're going to go and find some intraday selling right there, an intraday pause. Support's going to be right here at 71.21. Okay, let's go and take a look at Kiwi. Kiwi staging staging an oversold rebound. Friday's close was constructive for bulls. A daily close above 67.78 will generate further upside momentum. 68 is at 38%, and support is 67.09. So let's go on and move into the Kiwi. You can see here, we made a run up here, but kind of given a little bit back. And it's one of the reasons why, even with the Aussie, I was saying, hey, look, I think we'll get, we're going to target 72.70. We're going to get some resistance 72.33, but I think just above 72 cents, you'll see some stops tripped, and you'll also see some sellers come in. So looking here at the Kiwi, we're going to have our resistance come in right there at 67.95. Not much higher. I'm not giving too much latitude with these two, so we'll go with 67.95. And support comes in right there. 67.25. So almost about 40 pips lower. Look, this is a nice little rebound in here, but once again, like I said, it's going to have some upside struggles, and we could have pushed even higher. And look how we're sliding right back down the pole. That's why I don't want to give this thing too much room, and why I wanted to go with the 67.95 as our intraday resistance. Now let's go move into the CAD. After successfully closing above resistance level 33.54 on Thursday, the pair lost the level on Friday. The pair is marred in an 85 pip trading range, moving up and down at the whim of crude. Upside resistance is 32.83 and 32.95 on the lower end. So you can see here, we've been stuck in this range here, and that's what I was referring to, the 33.2, 32.95. I mean, it's clear as a bell right here, and we're just up and down. I mean, although we were looking here, we were moving, marching to a certain extent higher. But over the week, look at this, down, then up, then down, up, down, holding here. No changes here yet, and we're just dependent on what happens with crude at this point. So we are starting to. People have talked about, us reaching a key level here in crude. We'll see whether that materializes here as far as crude potentially starting to ease back. We are working back a little bit. We'll go on and take a look there quickly. So you can see here with the crude oil just starting to ease back a bit. Maybe that will help a little bit, but I'll tell you what, dollar CAD's not reacting too much. I guess dollar CAD, even though we've started to slide a bit here, not a whole lot, but we are off almost $1 from these upper highs. But once again, like I said, if we're going to get this pullback in crude, then maybe we'll be able to get this dollar CAD to go on and move higher. But for right now, starting out the week relatively quiet. Well, starting out that week quite like that, those are going to be actually our bias chart resistance and supports, the 33.82 and the 32.95 at this point. So let's go on and adjust for those. That's a bit wide than normally we would normally go and use, but as I said, we have to see which way that the dollar CAD wants to start of the week. If we're going to start pushing down to the lower end, then you'll know where your risk level is right in here. Let's go and move into the peso. Boy, has this been something else with the slide that we've seen here. After last week's death spiral, the pair will begin the week searching for value, volume buying, between 1865 to 1872. The pair needs a daily close above 1893 for a pause in the downside momentum. The market requires a daily close above 1913 to offer a bullish argument. So let's go and take a look at the peso on a daily basis. And death spiral, this is just what this has been. Look at this. Oh my goodness. I mean, there's been a couple of pauses. I thought there was some good areas to go on and come in. And I thought that 1882 was going to hold like a champ. I thought we'd see, and we did go on and see a pretty good pop. Remember, we even had our resistance, I think it was at 1893. And I thought, well, that may seem a little bit silly for it to be that close. Because I thought you might have to push it. But certainly that's just right before that is where they ran out of gas. And I thought we'd kind of hold. You even had an inverted hammer here on the 2 hour, so it looked all good, and thought, okay, now we're going to make that move, and then we just started to slide. It looked like we tried to come right back, and they quickly lost it all over again. So looking here on the daily, this is what I was referring to between 1865 to 1872. You've got some volume buying in there. I'll show you right there. You see that? So this whole area here, so I would expect some demand to come in. Got some good volume coming in right here across the board. 1865 to 1872. We'll go with this 1865.6. Mark's is doing his best to hold up. I don't know if it would make it all the way to that 1865, but somewhere, at least you know your risk area would be if you were to step in. Maybe we'd split the difference and make it like 1868. 1865, it's already had a pretty good little pullback to start with. Tell you what, we will split the difference and we'll call it 1868. Between 1865, 72. called 1868. On the upside, it's going to be 1886. Right there, 1886, 3. Now remember, we need a daily close above 1893 just to get a pause. And all that should be, all it would do is just right there, would just give us a reprieve from this downside death spiral. Okay, but we would need to close above 1913 right there before bulls could say, okay, now we're making a bullish argument. Because I tell you what, everything in between is just going to be selling opportunities. That's the way the market's going to perceive that. Rally up to 1895, 1905, 1908. Hey, sell, sell, sell. At least that's the way the market, from a technical standpoint, will look at it. Not, you'd have to get to up to 1913 to close above 1913. You see it right there. To say, now they'd say, okay, now we can make the bullish argument. Now that seems like that's a long ways off, but then if you look how far this market came back, yeah, you'd have to get there tonight, because each subsequent rally has just been just a failure here. So it'd be one of those, fool me once, shame on me, fool me, or fool me, shame on you, fool me twice, shame on me. So I'm saying is the market would not be buying this unless we saw some huge reversal in equities or something like that. But once again, like I said, any rallies back, you need a rally to you need a daily close above 1893 just to quell, just to get offer a pause, and then everything else is going to be considered selling opportunities unless you get a daily close above 1913. Then you say, you know what, looks like the bottom may have been put in. Like I said, it would be a bullish argument at that point. Moving into the dollar yen. To me, the jury's still out on this, because I know the cases that you got up above 112. From a technical standpoint, it's just like the gentleman asked me about the euro on Friday, and I think he was looking for the further downside. And I was like, well, look, it closed above 1291, so that opens the door for higher. Well, the same thing here with the dollar yen. It closed above that key 1187, but I'm still, if it was going to do it, why hasn't it done it already? That's my take. But we'll see. From a technical standpoint, it certainly looks it would have to go and push higher. It did close above the 1187, but we'll go on and take a look at here on the analysis. Friday, the dollar yen with exponential moving averages in the buy mode, closed above resistance level 1187. Initial target is 1292, but the market will find a volume challenge up to 1254. Initial support is 1136 on the daily. So one thing I will say, and I tried this on the short side, and it kind of makes me mad, because I used to always catch myself on this and say, I don't follow my exponential moving averages to my own detriment. And you can see here on the daily, it's been on a buy mode. Now, it rallied up and slid all the way back down, but look, the whole time it's been in a buy mode. So we did close above that 1187. The next challenge will be 1292, but my take is that I think we're going to say, look at this. Look at all this volume in here. So look, from here, you see that's 1254, all the way down, a lot of volume. And whether or not this trend line comes into play, I don't know, but I just think that if you closed above 11, here's my point. It's the same thing with the euro. We closed above 1291. Why aren't we blowing and going on the upside on the euro? Euro ought to be probably like 1340 right now, 1345, showing yet. You see, it was a good close. We need to move higher. Yet we're only in the 13 teens in the euro. The same thing with the dollar yen. Why aren't we a heck of a lot higher? We closed above 1187. 1187, has been key. Huge. So why aren't we blowing and going? Why aren't we at 1240 right now? You see what I'm saying? And look, we're not even above 112. So once again, just, but like I said, look at these exponential moving averages. It wasn't a buy mode. One of the things that I was concerned, I remember at the time when I'd missed an opportunity to get the euro, the dollar yen. And I remember, look, if you look here, and this only thing that makes me mad is because on the daily exponential moving averages, it was saying it was in the buy mode. But you see here, we got this low here after fall here. We rallied and we came back here and we started to come back, and that made me question, which is the reason why I didn't even get short until 11:50, no, 11:48 it was. And then I added, and I was able to scalp back a little bit, but I ended up having to, go in and cover. But the point is, like I said, I think that if we were to move higher, we should already be doing it. Why aren't we at the, we ought to be at around 12. We should be close. Worst case scenario, we should be like about 1228, 1230. We're not even holding above 112. You see what I'm saying? And that's after closing above a huge resistance level here at 1187. Like I said, we'll have to see what happens over the next few days, but it's just something to keep an eye on, at this point. So where's resistance? Well, we'll go and mark initial. You can see right there's volume all the way up to 1252. Good volume up to 1252. Let's see if we can see anything on the 2-hour chart. Right there, 1225. We'll call it 1225. We'll actually say 1226. But I tell you what, it's not evoking any confidence to me if you're a bull, other than saying, hey, look, as long as it stays above 1187, but it seems like we ought to be higher. We do have support, as I put in here, 1136. Let's see if we see anything closer on the intraday. Yeah, it'd be just a hair below that right there, 1162. And let's go into the dollar index. Throughout this whole time, we've been able to defend this 96.81 here on the daily, this key daily level here. We're just going to move this a little bit lower. I'm still, once again, with the old jury still out. Let's take a look here. The dollar index ended the week on the lowest daily close for the week, but was not able to take out the daily close support 96.81. A break lower will open the door for a test of 95.82 with a pause at 96.24. Intraday support is 96.62 with a corresponding intraday resistance level at 97.21. The jury is still out on the dollar. So that's exactly what we're going to go to with our support. Look, if they get a solid break below 96.81, I think they'll target for starters 95.82 with a pause at 96.24. That being said, initial intraday support is going to be 96.62. Right there, 96.62. And resistance, I'm going to go with this 97.13 right there. That might be a little bit of a stretch, but let's see. I'll tell you what. I'm going to tell you what, just move this just a little bit lower, considering the dollar is under pressure. 97.07. As long as we're defending that 96.81, this is still bullish. Now, will it be able to defend 96.81 on the daily close today? Well, time will tell. And that would only shift it to range. We're going to have to really get a solid break to turn this, because there's no way you could say it would be bearish. Let's go on and move into gold. Gold's poor weekly close, despite dollar weakness, indicates the gold is following equities. Initial support is 1280 with a possible move to 1267. The market needs a daily close above 1309 to get bulls back in control. So, yeah, it's the 1280 you can see here, and you would think, okay, the dollar's pulling back, gold's on the bid. Heck no. If you look at here on a weekly, look at this. That is not the type of move that's going to evoke confidence, okay? But that being said, we do have some good support there at the 1280. So that's going to be our initial support. If we can break lower, yeah, we've been talking about this. That's that old pivot, 1267, if we could get above that. See that? But initial support is going to be the 1280. As far as resistance, 1293 seems rather obvious, but let's take a look here on the 2-hour chart. It can be right there, 1296. 1296. Okay, and see this. Now let's go and move into the cross rates. Before we do that, we'll get to the New Zealand yen. Not really a whole lot of changes here. Although right now we did make this move up here in the yen, but the key level right now to start out the week, and we'll keep it simple, is going to be right there at 75.97. Support rather clear right there. You can see that. It's going to come in right there at 75.54. If we can push up higher, and if we are able to go in and do that, I'm actually going to give it a little bit more room. There was some resistance here, but really the real resistance kind of coming right there at 86.60. I think we actually had given it a little bit more room, and we had 86.63. I have to go and mark this for bullish. And no changes here. I'm actually going to continue to give it this room here. Which is 86. We'll call it 86.10, how it marked it 86.9. There's probably a little bit more room right there. We'll go right there, 86.16. There. Now, let's take a look here at the euro yen. Now, we did make it up here to the 78%, which is 26.68. And we're trying to push a little bit higher here at this point here. Maybe we'll try and see if we can, if we come into the US session, we can still push with these yen pairs. If we are, to me, the resistance is going to come in right there. 126.95. Watch that area, 26.95. That's actually going to be our resistance. And what we want to do is I want to see the reaction that we get there when we get up to this 26.95. Let's see how we hold up in here. Initial support would come in right there, 26.35. That's not that far away, but I think we was if you took a dip down there, I think that's where you would find some. This is just a hair a little bit lower right there. And we're looking just really for volume right here. Actually, we'll call it 26. 2630, 2630 right there. What we want to do is watch the reaction over the next couple of days. Maybe we can make this one more run up here, but this will be a level here, and right now this is 78%. How do we react to it? Are we able to hold it? We paired back just a bit, but I'll give it this: is that they've reached the 78%, but they're not pulling back that much. So maybe we can make one more push up in here later, push up here, and then come on. So let's just see how that plays out. Looking at the euro odd. Like I said, the years continue to move a little bit higher. Let's see. I'm not expecting a whole lot out of this. Resistance would come in right there at 58.17. And if we do start to slide back, it's going to be right there. It's not even that much, really. It's going to be right there. If we're going to hold here, 57.46. This was interesting on the Euro New Zealand because people were looking for an extended move up, and we got just above this level, and then we turned around and slid right back below here. Although we've held, interesting here because it's a pretty decent level right here. That 67.40. So we break above it. It looks like it's blue skies ahead, and we take a pause. And then look how we're just kind of hanging in there. This is not quite the same, but this is very similar. Not quite the same, but look. You see here with the euro yen. You see, it's not quite the same, but you see how we broke out. It's not as big of a breakout as euro yen was, but you see how we kind of hold here, then we kind of hang on, and then I'm not saying this is the way the euro yen's going to play out, but it is eerily similar. And that's why I'm afraid that we can start to go and pair back a little bit. But we'll have to see because this is a key. It's a good level, but it's also the 78%. But moving back in here to the Euro Kiwi, resistance is going to be right there at 67.52. This is the level here, 67.40. But where's your upside? Let's go right here. That'd be your risk if you're trying to say, oh, it'll probably fail. So it would be 67. Let's go with 67.50. If we get past this, then fine. It will be blue skies ahead. If we get past, so where's the real resistance? Yeah, because if anyone doubts this, they're going to say, "Oh, it's going to fail right here at 67.39 and roll over." That would be your risk level. So if they want to punch above it, you'd want to make sure it doesn't get above 67.50. So let's start with that for resistance. And support, that's pretty clear. It's right there. If we're going to hold 66.85. Actually, you can probably make the case for a little bit higher here. We'll go right there, 66.95, 66.90, 66.94 actually. And looking here at the Aussie yen, you can already start to see this thing kind of pare back a bit. You know, we still have the possibility to move higher. So what I'm going to do is I'm going with this 80.57. It's 161% of this move here. Because let's give it the benefit of the doubt. So this is the last significant up and down move here, high to low. And you can see there's 161%. Okay, so I'm going to give this thing the benefit of the doubt. And maybe we start out the week with equities moving higher. So let's go with 80.57, which is 161% of that move. See if they close out above 80.37. So it's be 80.57. Support is going to come in right there, 80.03. I think resistance is pretty clear where that is right there, 47.02. Sterling versus the yen. Support comes in right there. And it's still a ways lower here, but right there, 46.05, 46.05. Look at this. You see, we finally made it down here. I've had that in place at 38% and 127%. So you had two confluencing fibs Let's go with support right here. If this is going to hold. We finally made it down there. Right there. $82.33. Now we're looking for this to potentially move higher. Resistance would come in right there, 83.44. There you go. But we could maybe have the inklings of something. It'll be 83.44. The very beginnings of a move before to play out. Let's see. And here's one we just started to add in here. Got rid of the starting versus a Kiwi, and it's going to be the CAD yen. So, same thing, give the yen the benefit of the doubt in these yen pairs. It's going to be right there, 84.23. 84.31 is 161%. And support's going to come in right there, 83.53, called 83.54. Pretty tight range right here. Very, very tight. And it was actually, let's fix that. That was right there, 83.44. There we go. And that takes care of the bias chart. Let's go on and roll back into the main screen. And you can see here the euro's it just hasn't made that much of what was a close above 1291, as I said, where they could have added on. We'll see if things may materialize in the US session. Dollar yen still just below 112. I'll get this posted in the room. And thanks for joining us here on the European crossover webinar.